All right, welcome back to Power Lunch. Time now for some technical support. We have three stocks making some technical moves that we want to bring into focus for you. Our chartist today is Jay Woods, Freedom Capital Markets Chief Global Strategist. First up, the Russell Small Cap ETF. Jay, you say the relevance of this chart is to show the rally maybe broadening out. Well, maybe not so much today. Russell 2000 down a good bit.
We're hoping that this rallies out. What we've had here is a ridiculously long base, about 18 months. It looked like it was breaking out. It broke out above 200, and then it failed. A lot of people call this what we say a bull trap. And if it was a bull trap, we would have had a fast move back down. We didn't this time. Something changed. It held the 50-day moving average. We're testing it again right now. We are at that threshold. If you're trading this, you're watching 194 very carefully. I'd probably stay away from it and buy it a little bit more on strength. But 49% of this index are industrials, financials, and healthcare. Those sectors are starting to act stronger, except for the regional banks and the financials. Mm-hmm. But it looks like it's poised where it's finally going to get out of this chop zone, this hot mess zone, as we like to call it, and hold these moving averages. So any pullback, I think the story's changed. I think we can buy it on weakness. And your risk reward is still 23%.
The moving average is the lavender one.
Yeah,
there.
The 50
and what's the other one? What's the taupe colored one?
The taupe, taupe. I don't know taupe, but
the taupe is this brown or whatever.
That's
gray.
Taupe. I'm learning something new every day. That's the 200. It's a mess, like I said. Okay. What you want to watch is this 200 level, and you want to watch it not make a new low, get out of this chop zone. It's going to take some time, but over the long term, I think we rally and we break out of this zone. We form maybe a zone a little higher. All
right, let's go to Coin. Shares down today. Coin reports fourth quarter results Thursday. What are we seeing in the technicals on that one?
Yes, very important to watch earnings. It has moves of plus or minus 8% on average during earnings. We're watching a little weakness today. The stock had made a tremendous run after breaking out of this nice base. It ran to about 190, 187 to be exact, and it's pulled back. Where did it pull back? Old resistance became support. So we're watching this level very closely. I think any pullback on earnings, given that Bitcoin is at 50,000, given that Bitcoin has a little more legitimacy, it's an asset class here to stay. I think Coinbase is poised to reverse and climb higher. You have good entry points around this 115 to 120 area. And if we can gap up above the 50, I think we can run back towards 190, and guess what? Over the long term, it has a lot more to reverse. When they went public at 250. It spiked as high as 387, I believe. I don't think it's going to go that tremendously to the high side, but the risk-reward setup, the entry points are there. You can buy on weakness if it holds 120 to 115, and then on strength, I think it rallies to 190. So you have two possible entry points on a miss or on a hit with his earnings on Thursday.
All right, let's move on to ICE, Intercontinental Exchange. What are you watching on this one?
Well, let's talk a little bit about the long term. This is a stock that over the long term is in such a nice place. And what happened? We had two blips. One was COVID. All right, everyone suffered during COVID. And then in 2022, fair market. They made a big acquisition of a company called Black Knight in the mortgage space, mortgage technology. That acquisition has finally been brought into the fold. And what have we seen? We've seen slow and steady strength like we've seen in the past over 10 years. It's at this 135 level. It just broke out on an intraday. Now, this is 10 years weekly, so it gives you a broad base. I don't want to just pick stocks you can trade. I want to pick stocks you can buy, put away for the long term that you're not going to worry about. And the exchanges are good places to be historically, and ICE is the premier of the three exchanges that I follow, NASDAQ and CME. And I think it's poised, if it comes back on weakness, again, to buy over the long term. This 125 to 130 area is a good pullback. And then if it breaks out, I think we start another long channel to the upside over the long term.
ICE.
So, ICE.
Not on the rocks.
Yeah.
ICE. All right, Jay, thanks.